Hello and welcome back to New Wave, your go-to resource about climate investing in Europe. Sightline Climate just released a report about the state of globalization in climate tech. Obviously, you can find the report in the link in the description. It's a free report. It's 54 pages, so it's a long read. But in this episode, we take some key insights about Europe, from funding gaps to deployment trends and policy profiles. Get ready for a great overview of European climate tech. As always, before we start, please take 2 seconds to follow us on Spotify or Apple Podcast, or to subscribe to the YouTube channel and leave a comment. This really helps the show. And if you want to go an extra mile, please just share the show with a friend of yours. All right, music, and let's go. I'm so glad we can have this conversation. You've recently released a report about 54 pages of insights about the climate tech market. I read through it this morning, and I wanted just to get a few insights out of it for the European audience that are listening to us. Let me start with this. Looking through the report, it says that I think the US market, from a venture capital perspective in climate tech, is about, 20% bigger or larger than Europe. I was expecting so much more. So I looked into, the AI market, and I looked into VC as an asset class in general. And I think in general, it's more like 4 times bigger. And now we're talking 20%. So, what's happening in climate tech, Julia, and specifically in VC?
Well, I think it really goes back to the commitment that Europe has made to climate tech. It's really been a leader for a very long time, both on the major company side and on the startup side. And it kind of has all those elements that you really need to compete in the startup climate tech ecosystem. It has incredible universities that will spin out technologies. It has the major players who can partner with startups to help them build their first of a kind projects. It has the EU ETS, which has been such an amazing kind of stick for change. And then it has grants and research programs like Horizon Europe to provide the financial support. So when I'm looking at Europe in terms of the data, and I'm looking at the number of startups and the deals, they're pretty comparable to the US. So the real differentiator between Europe and the US in this respect is really those mega deals. In the US, you'll have really high profile startups that have a lot of competition, and then their deals end up, you see Series B, Series C being like hundreds of millions of dollars. And in Europe, the deal sizes are just a bit smaller. So it's really just about the size of the ambition, the hype that you can create around your startup. And I've found that European startups are, very humble. They're very aware of what they do well. And I was just talking to an investor a few days ago, and he was like, what did these European companies need to do to get there? And I was like, they need a bit more bravado. They need to be really ambitious about growth, and they need to, show themselves as unicorns in the making, because that's really what's standing between the US and Europe here.
Just to back that with a few numbers you have on the report, but you say that basically European checks are on average 15 to 39% smaller than the US. And then the growth stage specifically are 31% smaller. So you basically have this number of deals is pretty similar. The total amount of money raised by US startups is higher, and that's basically driven by your growth stage checks, which is quite interesting, right? Because that means basically we have a gap at the growth stage, or at least maybe not a gap in terms of funding, but rather the size of the checks that are made. I don't know for the people, but at least it blew my mind looking at the numbers in terms of amount of funding. If I look at the number more specifically in 2024, Europe has raised about 12 billion and the US 16 billion. Like, the difference is not that big. And if you account for like a baseball and a few others, you basically make up all of the difference, right? So super interesting.
Yeah, exactly. And I mean, it's the reason why we were wanting to write this report now is because there's been a lot of change in the US. A lot of the support has been redirected, moved towards security or resiliency. And a lot of people are coming to us and saying, like, okay, where's my next market? And Europe is that next obvious market. It's comfortable. Most people have connections there. There's a really good history of innovation. And so it's kind of like Europe becomes the jumping off point to then go into other markets that are even earlier in their climate tech journey. And I'm thinking about like India and LATAM. And, Europe is a much more comfortable step to make if you're looking to diversify away from the US.
Let's switch topics very briefly. But if we talk about, so we understand the founding market. Obviously, Europe is better at the early stage than late stage. That I think also shows up in the exit market. So looking at IPO specifically, it feels like the US and Europe are beaten up by someone else, which I wasn't expecting. So, who's the leader in the world in terms of climate tech IPO?
By our count, it's India, which surprised me as well when I was looking through, and we write these reports, every half on the investment trends. And I kept seeing like India, India, India. And it has to do with a couple of factors. It's like many years of investment in micromobility and renewables companies, but it has to do with just the size of the domestic market in India. And again, there's this idea of like ambition. All of these companies want to be the number one company in India, and then they have dreams of like going to the US and deploying their solution. And there's nothing here that Europe can't replicate. I think it just really has to do with the ecosystem and being a little bit more conservative, because if we had included SPACs as, along with the IPOs, then yes, the US would have been at the top again. Europe, I haven't seen as many SPACs. It really seemed like much more of a US invention and a US trend. And that was basically like a shortcut that brought a lot of companies public that then, maybe had a harder time of it. So Europe is it hasn't had those SPACs. It has been much more conservative about when you're going to IPO, but still a ton of acquisitions, like acquisitions on par with the numbers in the US.
If we look at kind of the development of climate tech companies, so we mentioned the early stage investors and the VC plays, we mentioned the exits, but in between there is the project development, right? So as a company, obviously you have to start deploying your product in the market. And in climate, that often means very, very large project that cost a lot of money. And in the report, you basically say that Europe is leading from a project development perspective. I'd love to hear a bit more about the story there.
Yeah, I always look at projects as the real proof of whether a technology is actually working. Because you can have as much software as you want, you can have as many lab projects as you want, but if it's not getting deployed, then it's not really going to become a market. And the thing is that when you're building your first of a kind project, what you're really chasing is a place where there will be demand, where you have the infrastructure, and where you have the subsidies. And if you look at those things, it's really Europe. So European companies really tend to try to buy as locally as possible. You'll often see companies in the supply chain within the same country as partners. And if you're thinking about a place where you can get a government subsidy, where there will be clear policy and regulations for you, and also an incentive to become competitive in an economic sense through the EU ETS, through carbon pricing, Europe is the perfect place for that. And so we talk about it in the report as the cradle of industrial decarbonization. And that's because you have programs like the German CCFD for industry, and you have the EU ETS combined with CBAM that's starting to make some of these green industrial technologies economic. And then you have massive companies who can deploy it.
Let me just take a small break there, but please, EU ETS, CBAM, all of the acronyms, let's define them.
Yes, I am realizing maybe not everyone follows carbon markets with the same vigor that I do. The EU ETS is the European Emissions Trading Scheme. So it's basically the carbon price that Europe has. But instead of just setting a particular carbon price, it's market-based. So you're basically trading credits, depending on how high your emissions are, how many emissions you've saved. CBAM is the carbon border adjustment mechanism. And there's a lot of complicated policy stuff going on in the background. But essentially, Europe wanted to put a carbon tax on any imports. And in order to do that, they had to make sure that their carbon price was being fully applied to industry. So industry has been getting kind of a break. They've been getting credits to cover their emissions, which has shielded them from the full effects of the carbon price. That's going to end pretty soon. So as CBAM ramps up, the free allowances ramp down. So that means that industry is going to face pretty high and rising carbon tax, which means that the green technologies, which won't be subject to it, getting a bit of a boost. And that's why you see so much development in Europe in green cement. So by our count, it's 55% of all of the green cement capacity that's been announced is in Europe, and 70% of what's in construction. I almost like that statistic better because anybody can announce a project, but actually having it in construction demonstrates that it's real. So this is like Europe's market working. It said, we want to decarbonize industry. We put the policy in place, the finance, the carbon price stick, and they're getting the results. They're going to be the home of green cement. They can be the home of hard to abate sectors.
That basically means, so if I understand it correctly, going back to the carbon mechanism, so we're basically in Europe artificially making the green technologies look better in front of the other technologies that are more carbon heavy, just because we basically say the carbon heavy is going to be much more expensive now because there's a price to carbon. And as such, the green technologies look better in front of it. Is that correct?
Yeah, exactly. So instead of directly subsidizing the green technology, you tax the emitting ones. And so on a relative basis, that means that your green industrial technologies are getting a bit of a break.
Which also at the same time, we're also subsidizing the green technology. So like you basically from one side increase the price, from the other side decrease the price. So like you're really trying to match them up from a price perspective. Super interesting. Well, that's a perfect moment to jump into regulations and policies in Europe. I mean, I think there's this famous saying that basically, America innovates and then Europe regulates, right? Like that's kind of the saying for a few years now. But I think when it comes to climate tech and what I've learned from the report as well, I mean, obviously I was aware of some of those regulations and policies and incentive, but like we have so much. I mean, looking at just a few of them, right? We have Horizon Europe, which I'll let you describe in a second. We have the EU Green Deal, the Clean Industrial Deal, and the ETS and CBAM market. I mean, CBAM initiative as well. So like it feels like we are really trying to push from all sides for the clean technologies. But what are your learnings from a policy perspective when analyzing the world from a climatic perspective? Like, is Europe really doing better than other places when it comes to pushing climate tech through policies?
I think Europe is very smart with the way that it designs its policies because it's a very fun comparison of like the US innovating and the EU regulating. The US also has a lot of subsidies in its time. And I think the big difference for me between US policy and EU policy is that US policy is designed to be incredibly generous subsidies because people are kind of allergic to the word tax. What that means is it makes it really difficult to revoke it when a new administration comes in because it's giving away money instead of taking money, and nobody wants to get rid of that. But that's what we've seen happen. What the Europeans have done very successfully is to have market-based mechanisms and ones that ensure that once technologies become competitive, then they aren't receiving like huge amounts of money that they don't need. It's all about this very delicate balancing mechanism. And that's essentially what these projects or these policies have done. So the EU ETS is market-based. The idea is that as everything becomes greener, then suddenly everybody has lots of credits. And so you will sort of see that become business as usual. So if there's too much emissions, then there's loads of credits and they become like very expensive. And then the Clean Industrial Deal, that was basically about wanting to build the supply chains for industry, for electrification. And then the Green New Deal was this idea of like, we have these goals that we want to get to, so like the Fit for 55, and what do we need to do to incentivize them along the way? So in Europe, it's always a combination. In the US, it's just like free money, take it. But that means that Europe's policy has been much more durable because everyone has understood that it's fair and that it's not just a handout. So policy is always the thing that makes something happen. And you need it on the demand side, on the financing side, and you need it as a stick. And so it's really the thing that accelerates a market.
And I mean, obviously, just to mention the big numbers, but like the EU Green Deal is a €1 trillion budget to allow higher risk funding from the EIB. I mean, we're talking big numbers now. Like Europe is really committed to try and make that happen. So that's also fascinating. Look, is there anything else that we should leave people with that we haven't touched on so far on this episode?
I think it's just to say that we're only scratching the surface here. So we wrote a very large report in partnership with HSBC, and there's a lot in it. So if anybody wants to read the whole thing, it's just sightlineclimate.com/reports, and that's where you can find it.
And just to mention it, it's completely for free. So I will also put the link in the description. But yeah, it's completely for free. I had a look this morning. It's an amazing report. It will take you a couple of hours to read through it if you really want to do it properly. But it's an amazing free resource for people to look into climate tech globally. But look, thank you so much, Julia. It was a pleasure. And we'll be talking soon.
Thanks, Hugo.